Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Yellen, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thank you for everyone tuning in.
Ted, a bullish gold narrative is being shaped by a foot-dragging Fed. What exactly is going on here that's going to make gold bullish?
Well, we live in a time where market forces seem to be shaped by narratives more than I've seen in my lifetime. I mean, one only has to look at Dogecoin, for example, how it's soared up the rankings of cryptocurrency to realize how powerful narratives can be. And lately, I think gold has kind of lost a narrative. It's sort of been in the shadow of Bitcoin for those who are looking for a store of value, and it's also been in the shadow of the Biden administration. We wrote in September that we thought that Biden could make bullion boring for the time being, as he kind of focused on the economy, and people would start looking at what he was doing, and that could overshadow gold. It was a pretty unpopular opinion with a lot of people in the gold space, but I think you just have to look at where the money flows, and if money believes that they see some type of investment opportunity in the green energy space, which they anticipated with Biden, that's what happened. We saw a lot of money flow into green energy before he was elected. Okay, so I got to make the case that narratives are important. One can take a different view. I mean, there's other forces. Jim, you have a lot of really great technical analysts come on Howe Street, and that's not to, for one moment, take away from, for example, the role that technicals can play in a lot of assets. It's just that in terms of sort of broad moves, broad medium-term moves, or thematic moves, I think narratives are really important to look at. So what we noticed in our April mining and crypto report, we publish a report that's got a list of top mining stocks ranked by our Ink Hedge process, as well as we have a separate list for crypto stocks. We have two different stocks. And this year we opened up our mining list. It used to just be gold, but we opened it up to all types of mining, mainly in response to the Fed doing this inflation targeting, inflation averaging posture that it took. So we thought that we would open it up to more industrial metals as well. And what we noticed in April was that there weren't very many gold stocks on the list. There were a handful. And that had us looking at our indicators, our sentiment indicators for gold. And we noticed that really there'd been a bottoming in gold insider sentiment in late April, and that coincided with a peak of Canadian gold stocks in April, short-term peak. And this is a short-term signal because this bottoming in sentiment took place in a very high level. So while we haven't been all that excited about gold for the past 6, 7, 8 months, the long-term positioning of insiders is still very bullish. And I think now we're getting to the point where we're looking over the next 6 to 18 months where we could be setting up a more constructive situation for gold and gold mining stocks. We've had the Bitcoin narrative. It's exhausting itself. There's other cryptocurrency narratives that are more compelling at this point. They don't directly compete with gold, though, the way Bitcoin did, in my opinion. So the Bitcoin narrative has, for the time being, run its course. It'll come back. It'll come in and out of favor. But what we've got now is a situation where the Fed is playing chicken with inflation, and this is a game that they can't play forever. So, what does that mean over the next 6 to 18 months? I think we're looking at a situation where we are going to have stronger inflation. And a lot of it. Not just a little bit. We're going to have a lot of inflation. Because everyone's talking about inflation. But I think that we're going to have a lot of inflation. And, the consensus is right now that there'll be a little bit of inflation, and then there's this debate, is it transitory or whatever? Is it the real thing? It's going to be the real thing, in my opinion. Now, where does that leave gold? Well, I think it leaves gold still kind of in the back, not the back of the pack in terms of the market, but in terms of the inflation hedges in this phase. When I mean this phase, I mean this sort of breakout phase of inflation, because, what we heard on Inc. Ultra Money just a couple of weeks ago was that, actually 2 weeks ago, which we put in our Canadian Insider Insights newsletter available on CanadianInsider.com. Michael Kao, who's an investment manager, had a very compelling case that in the early onset of inflation, oil and gas is your best hedge. Okay, it does better than industrial miners and does better than gold. That doesn't mean both industrial miners and gold do well under under a rising inflation, but once it gets above 2%. But oil and gas is the place to be if you really want to kind of ride that inflation trade. Okay, but mining stocks should perform well in that environment, but oil and gas is going to be, or it has been, and probably in our view will be, the best hedge at the early stage of this inflation liftoff. However, at some point, the Fed will have to react. Right now, it's getting away with, we're not going to raise rates, and no, it's too early to even talk about it. We wouldn't even talk about cutting our bond purchases. If oil gets to 70, 80, 90, 100, 110, 120, 130, they're not going to be able to say that. And I know there's this thinking in the market that, oil's never going back to $100. Well, that's based on the premise that OPEC can control everything. Well, I'm sorry. I think that OPEC is about as useful at controlling, or effective, I should say, at controlling the oil price as the Fed is at controlling the economy. I mean, if OPEC were that good at controlling the oil price, would we have had a negative oil price last year? Of course not. So, while OPEC will try and keep a lid on oil prices as we get through as we get into more reopenings around the world, I expect people are going to be surprised on the upside, but that's going to put the Fed in a bind, because once oil and other inflationary forces force the Fed's hand, they're going to have to say something. They're going to have to talk about raising rates. They're going to have to talk about tightening financial conditions, and at that point, I think that's where the gold trade really starts to get interesting. Because while it may sound counterintuitive that when you're putting up rates, it's bad for gold, all of that has been kind of talked about already, that the Fed's going to have to do it, and, gold is going to be, I think a lot of that is actually priced in. But what is not priced in is the impact of the economy in the way the Fed will have to move, because they'll be so far behind the curve. They're going to wait so long. I mean, they've kicked the can down the road, and they're kind of breathing a sigh of relief. But I guess I'd put it this way, Jim. I right now, I look at oil and gas stocks as an inflation hedge, and I look at my mining stocks, my gold, and particularly my gold stocks, as a calamity hedge. And right now, we're at the inflation hedge stage, but I can see the calamity can down the road, and it's getting closer. And once we get there, and the Fed can't kick it down the road much further, that is when the gold trade, I think, is really going to have its day. So, so the good news is I think you have time to sort of restock your gold positioning on weakness. I don't think, I could be wrong. And again, technically, if technicals kick in and gold breaks through some levels, you could see it really soar. But, you've got other people on your show that are better at those kinds of analysis than I am. But, I think that leaving aside the technicals, if you're just looking at sort of, the path for a really rapid recovery in the gold price, from its recent pullback, I think you're looking at calamity insurance theme, that the Fed has waited so long, will be waiting so long that they'll have to raise rates, but that will tip the economy over into all sorts of problems, unpredictable problems, and they'll just have to even do more than they did in what we saw last year, because once they make the mistake again, it will even be bigger, which means a big problem. So I think at that point we will see gold really get a lot of friends, because the Fed will be your market enemy. The Fed's your enemy. Right now the Fed's everyone's friend, but I think at some point they're going to have to take away the punch bowl or take away the gas pump, and but they're going to find that they think they can do it, but then the market and the economy is going to say no, and at that point I think gold will be your best friend in the marketplace. So yeah, that's our take on kind of where we're headed for gold. So we've got a nice bullish setup based off of insider sentiment, and that's our kind of macro overlay on where we think it's headed. So in the short term, we like the industrial miners and we like oil and gas in terms of immediate opportunity, but we'd be building our list and some opportunistic positions in the gold mining space. There's always some good management teams out there that are working on interesting projects. We wouldn't take an ETF approach at this point with the gold sector. We would look at stock specific areas. But as oil starts to run up, as oil and gas stocks start to soar, which we think you ain't seen nothing yet. I mean, basically, I could be wrong, but I think we got another big leg up here on the oil and gas. At some point, you'll want to scale that back and move more aggressively into gold, which will be one of your few friends out there when the Fed comes to try and stop the party.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. One of the little headlines you gave me before we started our chat was tech stocks failed the Yellen stress test. Can you tell us what that's all about?
Well, on Tuesday, we had this situation pop up where Janet Yellen, of course, the former Fed chair and now current U.S. Treasury Secretary, made the comment that interest rates may have to rise because of the economy overheating, and we're not sure if that was a slip or by design. But it turned out to be what we would call a stress test for how the market would behave if the Fed started to raise rates. So, in the first section, we talked about the Fed eventually having to come to grips with that. Well, we sort of had a little stress test about what that could look like on Tuesday. And what happened on Tuesday? Well, it was bad news for the tech sector, which, of course, did very well last decade. It was the Obama-Yellen trade, right? No, they fell. QQQ, the ETF that has a lot of tech stocks in the U.S., it fell 1.8% on Tuesday. Meanwhile, sort of the boring Buffett value-like stocks actually rose, including Berkshire Hathaway on the day. Our top 10 Inc. Edge stocks, U.S. stocks that we had ranked just a week before in our U.S. report, they were up on the day. They actually performed Berkshire Hathaway on the day. But the big winner was the S&P Materials and Mining ETF, up 3%. So, we have a little bit of a case study on Tuesday as to what will happen, or what could happen. We don't know if it will, but what could happen as inflation builds and as things overheat and the Fed has to start tightening financial conditions. In those early stages where the Fed is making the moves when the economy is hot, it's not going to be a great time to be in your favorite FANG stocks, and you're probably, listeners on your show, are probably going to start thinking about taking profits in some of their mining shares, their industrial mining shares, which, may be heading into a sort of a blow-off top period at that point. So it's interesting. It was interesting. Tuesday was very interesting. It reinforces our conviction in terms of how we're looking forward to the next few months. And so it should be a really interesting. The Canadian market should be a really interesting place to be. There's going to be a lot of opportunity for active managers between oil and gas, industrial miners, gold bullion, cryptocurrency, equities. We have a lot to choose from. This is really Canada's decade for stock picking and investing. And thank goodness, because the previous decade was a tough one. We had a bit of a flash in the pan with the marijuana stocks, but that didn't last too long. And very early in the decade, we had a run in the miners in the first phase of QE. But then the Tea Party's fiscal austerity kicked in, and that kind of ruined it. But the additional bond buying. So no, we're in a different environment. It's already started out to be a very good one for Canadian stocks post the pandemic washout of last year, March of last year, and by all indications, things are still looking pretty good. So, let's keep our eye on how quickly the Fed tries to address its inflation targeting, its interest rates and reducing financial conditions. But but they still seem to be singing from the same song sheet. The main Fed governors. I just read another one on Forex Live before the show saying, "Oh no, we're not even thinking about raising rates." So that's they're still singing that song while they are. It's the Canadian Equity Party is on.
Contributor to House Street, Stuart Muir, pointed out in the show we did today, experts predict a 500% increase in mineral demand in push to decarbonize the world. In other words, it takes a lot of steel, copper, and so on to build all those wind turbines, solar reflectors, tidal power plants, and so on.
Well, absolutely, and that's why I think looking at these industrial miners is important again, but you have to look at it project by project. Where are they in their development cycle? Are they waiting for financing? That's not a great place. When I mean financing, like for project financing, that's not a great spot to be in if long-term interest rates are rising. But once you get through that, and then you get closer to production, then that's a better spot. If you're an explorer and you're building out the resource, that's another good spot to be in. So the mining life cycle curve is really important, I think, to look at. And so if you got a mining stock that's not going anywhere, I'm not going to name names, but I have one that's kind of sitting there, even though it's got a large copper gold deposit, hasn't been really moving. And again, they put out their PEA. So now the question is, well, now what are you going to do? Like, you've got to go get the money, right? And so, but they've also got potential. They have a property that right next door, basically, that they can expand, and so there is room for resource expansion. So they've got to, I think, in my opinion, do a better job getting that narrative out there. And so I think, anyone who's got sort of an industrial miner that's not moving, I think you have to, you might want to take a look at how the company is approaching things, whether they're, hitting the right notes at the right time, in terms of where their development is, and so the mining life cycle is going to be really important, I think, for investors here to look at in terms of where you want to place your bets, where you want to lean, where you want to maybe move some of your capital. You focus it more on the explore, pre-PEA stage or the production stage. So so that being in that sort of post-PEA, post-feasibility study, haven't got the financing in place yet stage is probably the toughest one to be in, I think, right now.
We'll have more with Ted Dixon right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, why does Inc. cover a lot of junior mining and early stage growth companies during earnings season when all the big names are reporting the results?
Well, that's a great question. And the short answer is because most of the large companies reporting those results don't let their insiders trade while they're preparing those results and while they're releasing them. And it's kind of like the buses coming at rush hour. So while we haven't been seeing a lot of big companies with insider filings over the past couple of weeks, we expect that in the last part of May, we are going to see them all start filing pretty much at once. So we are going to have an avalanche of insider filings and in some of the bigger names. So if you're an investor or an advisor, that's looking for more larger investable names, check back on Canadian Insider Inc. research mid-May, and we'll have a better take on what some of the large players are doing with their stocks in the larger companies. So the energy sector is one that we're really interested in. We want to see how much insider selling happens given the big move we've seen in the energy sector. We'll be surprised if we don't see some profit taking, but the Canadian energy stocks, they are kind of consolidating here, so we'll see after results come in what kind of insider selling. So I'm really interested in what happens in the energy sector. See if we have to reassess our take on that. But right now we're still quite constructive on it. The smaller companies, of course, now earnings aren't as big of a deal, right? If you're a junior miner, what's a big deal is if you've got a hot drill result and you can't trade, you shouldn't be trading in front of that, right? Or if you have a bust, if you have a trading, a drill results that come up empty, you shouldn't be trading in front of that. Same, right before you release your PEA, so the junior miners and the junior resource plays, or the biotechs, as well, like trial results. Those are sort of, the nice thing about them is they're kind of independent of these earning windows, so they have this sort of asynchronous trading blackout schedules, which are really more aligned to the actual developments in the firm as opposed to a calendar. So it's nice that during these trading blackouts we can focus a bit more too and go look through our ranking and focus on some of the smaller companies. So we've been doing that. There's a few of them on CanadianInsider.com on Inc. Ultra Money Free. You can see my morning report previews, some of them for free on there. And we've had a few of the juniors up there. So we will be getting into some of the larger companies, I think, in the next couple of weeks.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back. It's been a pleasure.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.